I know that you went to Texas A&M. You're an Aggie. You guys have a saying down there, whoop, when something's really exciting. Are oil investors, are they saying whoop this morning with the moves in oil, and is it sustainable?
Absolutely. And we do think this is sustainable. We always thought it was an oversell and a knee-jerk reaction down. You know, you saw us come about 22% off our highs with WTI was trading at 85, and then it slipped down below in the 60s. But then we've seen some stabilization as we realize the variant may not be as bad as everybody thought it may be, and waiting on the data. You know, generally we think oil in the 70s, 70 to 80s is a great sweet spot for a lot of the E&Ps we like. Permian Basin and honestly most everywhere in Texas is very cheap to get it out of the ground. You're talking about $50 break evens to cover the dividend. So there's a lot of companies we like, and we do think this is sustainable, and we think we'll see it continue to rally through year end.
So right now we're looking at travel returning, but we're also seeing rising cases of Omicron. I always say it the wrong way. Is that a concern for you when it comes to the oil markets? We saw generally an outbreak of Delta. Having a hard time, Vic. You got to help me out. We saw an outbreak of Delta, but it didn't really seem to impact the markets directly. What do you think about Omicron?
Well, I don't think any of us know how to pronounce it, quite frankly. I need to go back and learn Latin a little bit better, obviously. But I think Delta is a good playbook. Look, we don't have a lot of data. We always want to look back historically. And when Delta came over, you know, it was identified in late 2020. It became a variant of concern in early March. And then the summers really when it was a major player around the world. But you saw markets continue to rally through the summer. S&P 500 was up about 9% from June to August. And so I think the markets are going to react to variant news, especially when it's a quiet week. You know, the Fed has nothing to say. They're in a blackout period. And we do like to panic, but I think people need to be patient still and realize that we have a lot better tools and treatments than we did in early 2020. So a new variant, and they should be expected. I think you're going to be fooling yourself if you don't think we're going to have another 20 or so variants, but our drug treatment programs are much stronger than they used to be, as well as our vaccinations. So I'm very hopeful it's not going to dent it much at all. I think we saw potential international travel, but they're going more towards advanced testing and vaccine mandates versus canceling and closing down as much. So I see that as very positive signs. It won't be as much of a drag on travel and as much of a drag on energy. All
right, we want to get your take on the broader markets, but first, can you give us a few names in the oil space that you see as the best position to take advantage of this current climate?
Sure. Our top three picks are kind of the E&P space, which are very, very sensitive to oil prices since they're in exploration and production. We like Devon, we like Diamondback, and then we like EOG. And all of them are three very shareholder-friendly companies. A lot of them have, the Devon especially has kind of pioneered this fixed plus variable dividend where they're paying a strong base dividend, but up to 50% of their excess free cash flow can also be paid out every quarter as a variable dividend, as well as they're focusing on share buybacks. So you look at these companies, you realize they're trying to push capital to shares. They're staying very capital disciplined as they're going forward. Look, they've been burned twice hard in the last decade. And so I don't want to say that it's the death of wildcatting and all of this excess, but rig counts are still only at 467. We're still well below our pre-pandemic peak.
All right, Vic, we almost got to get out of here. I got to ask you, you are overweight U.S. value and cyclicals. How does inflation play into that thesis?
I think inflation is no longer transitory as the Fed finally capitulated, and cyclicals are a great place to be, you know, especially the energy market and materials. If we think we're going to be in a period of higher prices, let's own stocks that benefit from that.